America works. And when I bought my first stock when I was 11, that was in the spring of 1942. And that was a couple months after Pearl Harbor. And we were getting clobbered in the Pacific at Corregidor and Bataan. I mean, the Death March of Bataan. And in the European theater, the Blitz of England was on. And the Dow was at about 100. But just look at where we are now. I mean, the country really works. The trick is, it seems to me the obligation of a society as prosperous as ours is to figure out how nobody gets left too far behind. Right. You only have to be right about a couple. I met Bill Gates on July 5th, 1991. We were out in Seattle, and Bill said, "You've got to have a computer." And I said, "Why?" And he said, "You can do your income tax on it." I said, "I don't have any income. Berkshire doesn't pay a dividend." He said, "Well, you can keep track of your portfolio." And I said, "I only have one stock." I said, and he says, "It's going to change everything." And I said, "Well, will it change whether people chew gum?" And he said, "Well, probably not." And I said, "Well, will it change what kind of gum they chew?" And not. And I said, "Well, then I'll stick to chewing gum and you stick to computers, you know." I don't have to understand all kinds of business. There's all kinds of business I don't understand. But there's thousands of opportunities there. I did understand the Bank of America, you know, and I'll be able. I'm able to do that. I'm able to understand some given percentage. But Ted Williams wrote a book called The Science of Hitting. And in The Science of Hitting, he's got a diagram, shows him at the plate. And he's got the strike zone divided into 77 squares, each the size of a baseball. And he says, if I only swing at pitches in my sweet zone, which he shows there, and he has what his batting average would be, which is 400. If he had to swing at low outside pitches, but still in the strike zone, his average would be 230. He said the most important thing in hitting is waiting for the right pitch. Now, he was at a disadvantage because if the count was 0-2 or 1-2 or so on, even if that ball was down where he was only going to bat 230, he had to swing at it. In investing, there's no called strikes. People can throw Microsoft at me and, you know, you name it, any stock, General Motors, and I don't have to swing. And nobody's going to call me out on called strikes. I only get a strike called if I swing at a pitch and miss. So I can wait there and look at thousands of companies day after day, and only when I see something I understand and when I like the price at which it's selling, then if I swing, if I hit it, fine. If I miss it, it's a strike. But it's an enormously advantageous game, and it's a terrible mistake to think you have to have an opinion on everything. You only have to have an opinion on a few things. In fact, I've told students, if when they got out of school, they got a punch card with 20 punches on it, and that's all the investment decisions they got to make in their entire life, they would get very rich because they would think very hard about each one. And you don't need 20 right decisions to get very rich. You know, 4 or 5 will probably do it over time. So I don't worry too much about the things I don't understand. If you understand some of these businesses that are coming along and can spot things on, if you can spot on Amazon, for example, I mean, it's a tremendous accomplishment what Jeff Bezos has done. And I tip my hat to him. He's a wonderful businessman. He's a good guy too. But could I have anticipated that he would be the success and 10 others wouldn't be? I'm not good enough to do that. But fortunately, I don't have to. You know, I don't have to form an opinion on Amazon. And I did form an opinion on the Bank of America, and I've formed an opinion on Coca-Cola. I mean, Coca-Cola's been around since 1886. There's 1.8 billion 8-ounce servings of Coca-Cola products sold every day. Now, if you take 1 penny and get 1 penny extra, that's $18 million a day. And 18 million times 365 is 7 billion, 3 less 730 billion, or $6,570 million. So annually, $6,570 million from 1 penny. Do you think Coca-Cola is worth a penny more than, you know, Joe's Cola? I think so. So, you know, and I've got about 127 years of history that would indicate it. So those are the kind of decisions I like to make. And you may have an entirely different field of expertise than I would have, and probably much more up to date in terms of the kind of businesses that we're seeing evolve. And you can get very rich if you just understand a few of them and understand their future. But Fortunately, I don't have to. I mean, if we go into Heinz, and I look at people pouring ketchup on, hamburgers and potatoes, I don't think it's going to change. And the nice thing about it, some products travel, some products don't travel. Candy bars don't travel well. I mean, if you look at the Cadbury bars in England, they don't sell well here. And if you look at the Hershey bars here, they don't sell as well someplace else. Soft drinks travel, and ketchup travels. I like products that travel. Just imagine, 1789, just go back just a few hundred years. There wasn't anything here, I mean, in this country. And the Sir Christopher Wren, I think, that designed St. Paul's Cathedral is buried there, and there's a little plaque there, and it says, if you seek my monument, look about you. Well, I say, in America, if you seek America's monument, look about you. This country has all come about in a few hundred years. We had less than 4 million people, when we became a country. China had 300 million people at that time. Europe had about 75 million. They were just as smart as we were. They worked just as hard as we did. They had natural resources that were similar to ours. And yet we ended up with a quarter of the world's GDP, a few hundred years later. We've got something that works, and we don't want to mess that up. We want to figure out what we do with this abundance better as we go along. But you don't have to worry about the system working. But you will have periodic recessions, and you will have an occasional panic brought on by something that who knows where it comes from. The thing to remember at that time, I wrote an op-ed piece in the New York Times in the fall of 2008, and I said, that the country will come back. It'll go through a big recession and everything, but it'll come back, and it's coming back. So don't ever worry about America. It'll tell you, you're in the right place. The best investment I ever made, I bought a book in 1949 by a fellow named Ben Graham called The Intelligent Investor. I don't remember what I paid. But aside from what I paid for my 2 marriage licenses, that was the best investment I ever made. It's very important to have the right framework. You need to have an approach to investing that's sound. And Graham's approach is simple, but some people adopt to it, and which I did immediately, and most people don't. But if you have the right philosophy, you will find opportunities as you go through the next 20, 30, 40, 50 years. And frankly, you're most likely to find them when in periods like 5 years ago when we were having the panic. I mean, stocks sell at silly prices from time to time. Most stocks at one time or another sell at very silly prices. And it doesn't take a high IQ to figure out that they're cheap, but it does take a temperament that's willing to step up and actually act. I tell people, if they're going in the investment business, if you got 160 IQ, sell 30 points to somebody else because you won't need it. I mean, I figured out very early, you don't have to be that smart in this business, which is fortunate, but you do have to have the right temperament. And you have to be able to ignore what other people are saying and simply look at the facts and decide, is this stock which is selling at X worth 2X? And occasionally you'll find things like that. And when you don't find them, you don't do anything. So that's my generalized stock tip, no names. The economy is getting better. We are in an experiment which hasn't really been tried before. I mean, Fed has a $3.5 trillion balance sheet, and buying securities is usually easier than selling securities, as sometimes people find out. So we don't know how this game plays out. And just the announcement, whenever it was a few months ago, or the hint that tapering was going to occur, that had some significant market reactions, probably 100 basis points or so in the 10-year. And what will happen when they actually, if they actually try to deleverage the Fed? I mean, what has happened is the American public deleveraged and the government leveraged up through the Fed. If the Fed deleverages that in any big way, that will be a new experiment, and it's always been fun, and there's a company here in in Washington called Geico, and I first got exposed to that in 1950. I was 20 years, I was 19 years old, well, it was 51, I'm sorry. I was 20 years old. And I came down here, and I came down on a Saturday because I'd learned that my professor who I worshiped at Columbia named Ben Graham was the chairman. I got down here and the door was locked. When I went to the building, because it was Saturday, and I pounded on the door, and some janitor let me in, and a marvelous fellow named Lorimer Davidson spent 4 hours with me teaching me all about insurance, and he helped me so much in life. You're going to get helped by some wonderful people in life. It's a great thing to remember later on when you get to be my age, that all the help you've received from different people, because nobody does it alone. Obama got in trouble when he said that in the campaign, that nobody does it by themselves. Nobody does do it by themselves. We all sit in the shade of trees that were planted by others. So it's obligatory, I think, to plant a few trees ourselves if we've had good luck.